Good morning, everybody, and thank you for being here for the Hedge Invest Newman Credit performance update for the month of September. September was slightly negative for us, around 50 basis points. We had a very positive contribution from our credit strategies, where we predominantly focus on stress, distress, challenge credit, both long and short, and that produced around 150 basis point positive performance. Unfortunately, we lost around 2% on a variety of things. 3/4 of that was on macro shorts and put option, and part of that was our shorts on financials, which have performed very strongly, especially in credit. And then also on some on the event strategy, we had Peabody, capital structure trade, credit equity into the judge ruling, and then we had Tiffany, and both we suffered a bit. We kept Tiffany, but we reduced Peabody. Overall, going forward, we're very excited about the strategy, and the market opportunity we see is probably the best in a long time for us. We're going back to the 08-09 kind of environment. We think there's a lot of credit mispricing, credit discrepancies, and there's a very big imbalance between demand and supply on challenge credits, and that's what we're focusing. We're trying to establish a very diversified book on the long side, anywhere between 50 bips to 2% max at the entry point, and on the other side, we're trying to have a diversified pool of shorts. On the macro side, we remain very negative on financial institutions, especially credit exposure. We think banks will be very exposed to all the worst thing about COVID. I remember most of the financing of coming for the SME environment in Europe is coming from banks. We also think there's a big ticking bomb, which is commercial real estate. So we remain short banks. We think is the most overvalued sector, especially in credit, and we think it's a very dangerous sector to be long. While we think there's a lot of opportunity in the credit distress space. We remain short emerging market. We dislike it. We suffered on it in September, and I think for also the entire period of summer. We really think countries like Turkey, South Africa, Brazil will be very challenged to fundraise. They don't have the backing of the ECB or the Fed. They are on their own, and they will be repriced. I think the lesson of Argentina is meaningful. As you can see, on a currency adjusted, any debt, even restructure, can explode back again very, very quickly. Going forward, big drivers obviously are COVID and the US elections. I think COVID, every day that passes by, we feel more comfortable on either the protocol, the rules, and the lack of a lockdown. So I think, we need to be prepared to have, a COVID big rotation, which means risk-free assets down, and possibly technology down, and a lot of, other sectors where there is, travel rather than hospitality, rather than simply commodity or infrastructure that could actually benefit. Obviously, the election is very important in US. In a way, it became clearer with Trump getting sick, because obviously he has increased the chance of Biden. Very careful about, polls and all the rest. But at the same time, we can think that could even accelerate more the asset reallocation into year-end. Again, very dangerous to be long risk-free assets in an environment where the fiscal and monetary stimulus are so violent in a way. And I think a democratic sweep could provide a massive infrastructure boost. And I think on that, we, of course, remain very wary watchers, but we need to be mindful that this could be really important for the market. So overall, main focus for us is challenge credit, stress, both long and short. And at the same time, on the macro, we are thinking and expecting a big asset rotation. Thank you.